rates, war, bonds. Where do we start?
Yeah, so sadly, there's a lot of turmoil in the world right now. Normally, you would think that war would drive a conservative approach to a safety, flight to safety due to the uncertainty and risk of a war. And then
Hmm.
what actually happened was the exact opposite. And the reason why is because of inflation. So remember, everyone has two buckets. They either conservatively invest in bonds as a safety net mechanism, right? A flight to quality, a flight to safety, or they invest in the financial markets, the stock market, the NASDAQ, whatever it might be. When things are changing in one of those environments, it normally creates a teeter-totter effect in the other. So what ends up
Okay.
happening a lot of times is you'll see a supply and demand shift in those specific things. So why rates didn't go lower is because of one thing, because oil is involved with this war. And the fact that oil prices are going to go
Mm.
higher means that the cost of consumption for all of our petroleum, which is anything from my remote control to maybe some type of computer device, all those costs will go higher, which then makes the price of those items go higher and create more inflation. So what
Mm.
happened was bond traders, people that invest in bonds, realize they need to higher they need a higher return if inflation is going to continue to go higher. So
Hmm.
that is why we are seeing a shift and not a really big push down on rates right now. They actually went up by about a quarter in rate on Monday and have settled out yesterday a little bit, but it's because people thought that, and they do believe inflation will now spike again because we are dealing with inflation due to the cost of pretty much the one material or substance that is in pretty much every product we consume, petroleum.
That's interesting. I mean, what we don't think of now that you've just brought it up, we don't think of us moving one thing to another thing, and that has a lot to do with construction too. Like, think about everything that goes to Home Depot or everything that goes to builders, all that whole process, even down to the simplest thing, which is your handyman now having to go all throughout the city, their costs just went up too. So that makes sense on inflation, dude.
Yep.
Everything is hit by transportation, and that's the core of it. So that's why Elon is telling us to go all electric. Got it.
Exactly. And again, another thing to think about, if you look at this as like a global market strategy, I was an economist in grad school and undergrad, and I did some other programs. There is always going to be a fight for resources. Natural resources are not unlimited, right? There's a
Yeah.
limited amount of resources on our planet, right? At least on this planet. And so that resource fight is why you saw some things happen in Venezuela, for example, right?
Oh, yeah.
Venezuela had a big gold and oil deposit reserve. You
Yep.
have a fight for energy right now with AI, with technology.
Dude.
There's a bigger demand being pulled from the traditional systems. So natural gas is one of those things that is powering AI. So all those data centers you see, all of those things that you see out there, our country is not really geared the same way as China is with like nuclear power, right? We have a lot of conflicting beliefs in nuclear energy. So you're just seeing this really come down to the fact that inflation is hitting core resources that drive every element of consumption, from, like you mentioned, transportation to the cost of goods. And that's what you're seeing right now in the marketplace. So that's not exactly talking about interest rates, but I thought it would be better to talk about the fundamentals of how things move and what drives market activity.
Okay.
Throughout.
So it shoots up. So we were in the fives on average, right? I know that you can get us rates. You could probably still get us rates in the fives
I'm
anyway.
closing four transactions this week that are below 6% with
That's what
very
I
little
thought.
cost. Yes.
So rates when the war the next day war was announced or we saw it, rates shot up on average according to Mortgage News Daily to 6.14. Then they dropped down to 6.07, right? According to them. And now we're thinking, well, what happens next? Because longer term, if we're in this war or a war or wars for a longer time, we have to take a look at bonds. Can you explain that piece to us as well?
Absolutely. If there was not oil involved with this part of this war, I believe there would be a stronger flight to safety this direction, right? To the bond side. We're not seeing that because there's a lot of uncertainty. When there's uncertainty, people think of it as an opportunity or a threat. So I see this from a real estate perspective. If you're still a buyer, you're still better
Hmm.
off being in front of lower interest rates because if you're in front of lower interest rates, the bidding wars will be less. There'll be less demand for housing. So you should see a better opportunity to negotiate on pricing also if you're a buyer. So to me, I always take the contrarian approach that if everyone says to wait, I go. If everyone says to go, I wait. I'm always a contrarian because that's to me when you can stand out in a crowd. If you're a seller and there's no low inventory, it's a great time to sell. If you're a seller and there's a lot of inventory, probably not the right time to sell. So I
Yeah.
always look at it as a way to stand out in the crowd and be unique and different because people need to move, people need housing, life events happen, like we've talked about several times in previous interviews. And to me, it's just smart people that have a long-term plan are still moving forward with buying housing. A lot of the news you see out there, people have stopped, people are pausing. Yeah, war is scary. There are a lot of unknowns. There's a lot of emotional elements that go into that, along with economical elements. So we just want to make sure that if you're making a long-term decision, this should not hold you up for making that decision because you have to think 10 years down the road. I'm always a big believer in looking ahead when you make a decision in these times. What is your goal? Is it to be in a better neighborhood? Is it to be in better schools for your kids? Is it to be closer to your family? All those factors do not change in wartime environments. What is important is just, I think, long term, whenever I'm doing anything around real estate financing.
That makes sense, man. That makes a lot of sense. Okay, so what do you predict? You think we rates drop longer term? They continue to go closer to, remember, average, right? Not you.
Yeah, yeah,
Five,
yeah.
high fives,
Yeah.
five, seven,
I
five,
believe I
or
believe we're going to see there are two factors that can happen that can drive rates lower. One is how bonds trade. There's normally a certain built-in margin for what I would call raw pricing versus retail pricing. Retail being what the consumer gets in this example. So
hmm
what can also happen is that margin can be squeezed. So banks and lenders can choose to reduce their margins to pick up more demand for their products, which means a lower interest rate. So there's the case by case, lender by lender example, but on a global overlook, I believe rates will go lower. I think we'll be in the 5.5% range by probably June, because I think we'll have some more clarity on what's going on with all these global wars and events. I think rates will go lower. There's a really big push for that. We know politically also that looks better for politicians when rates are lower because they can tout that they fix the economy or whatever they are saying they do. And there's a lot of cause and effect that will happen from this. But again,
hmm
rates will go lower. I think people that are smart are going to still buy or still
Yeah.
sell. And as rates go lower, guess what? You can always refinance if you are buying a house. There's no prepayment penalty on any loans that we do, which allows someone to have the flexibility to go take an opportunity if it exists to refinance. So again, long-term plans should not be affected by an eighth in rate. What should be really the driver for you is what are your objectives? What are your goals personally? And how you
hmm
as an agent or me as a lender can help give the tools for someone to make that decision.
Interesting, man. I agree with you. I also see that right now with the uncertainty, I'm seeing a lot of people uh, naturally only move if they have to, right? That's why we're like what, less than 4 million transactions year over
Yeah.
year, which is
Yep.
crazy, right?
It is
Um,
wild. And again, it's just life events. I call myself a life event or lifestyle lender. If I'm helping people with big decisions for big life events, then I'm always in
mhm,
demand. If I'm just looking at the
mm,
lowest rate or close in 6 days, those are not really factors that matter when life events are at hand. You either have to move
mhm,
or you don't have to move. You either have to sell or you don't have to sell. You have a death or a marriage or a divorce or kids unexpectedly, whatever those job opportunity. Those are the events we
Hmm.
want to stay in front of. Those are the events that matter for us. And as a professional, that's what makes a difference.
That's why I love homeowner AI, which we covered 2 weeks ago. Makes
Exactly.
sense.
Stay relevant, be there when you're needed, and give valuable information and insights, and make sure that you're always listening to your client and doing what's in their best interest. And that's not a secret sauce. It's just being a human, passionate human being. And like you lead with kindness. I love it. I always aspire to be like you, my friend.
Well, dude, we're always looking at each other for motivation, so it's perfect.
And no, I'm not going to be eating your diet though. So I will make sure that
No,
we'll
hamburger
have,
diet.
yeah, we'll do off days. You're eating a hamburger, I'll have a salad. We'll make sure we hedge our bet there to make sure one of us
That's
is okay.
funny. Thanks, everybody. Thanks, Jim. Always
Take care.
awesome, buddy.
Have a great week.
You too.